Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Friday. These are the stories that set your agenda. A cooling issue at a data center halts trading on the Chicago Mercantile Exchange, hitting contracts for US crude, stock futures and treasuries. We bring you the latest. President Trump announces a permanent pause to migration from, quote, third world countries after the death of a National Guard member believed to have been shot by an Afghan migrant. Plus, the Hungarian Prime Minister Viktor Orban confirms he's heading to Moscow for talks with Vladimir Putin. The Russian president says he's open to ending the war in Ukraine, but a peace plan is yet to be agreed. Well, you may not have noticed it, but global stocks are actually set for the best week since June. And you've seen gains coming through across Europe, of course. 4 straight days of upside for European markets. It was a modest close to the upside for European stocks yesterday. Of course, volumes thin because of Thanksgiving holiday stateside. But today, futures are looking to build on that very, very modestly, of course, but still on track for a little bit of optimism, pointing high by just 1 point. We'll see if we can notch 5 straight days of gains for European stocks. US traders do return to their desks for half a day of trading later today after that Thanksgiving break, of course. Here in the UK, FTSE 100 futures pointing up by 0.2%. We do not have a futures print on the US because of the technical issues at the CME. Let's flip the board and have a look cross-asset as we take into account, of course, the lack of pricing that we're going to have around treasuries, again, because of the same issue. Euro-dollar, though, at 115. A little softer on the single currency, down 0.1%. Bitcoin back above 91,000. That's been seen as a bit of a key level in terms of whether or not you can get further upside, given the pressure that this cryptocurrency has been under. Today, gaining just 0.1%. And gold, which has benefited from rate cut expectations, 4 straight months of gains, set for a 4 straight month of gains at 4,182, up 0.6%. Again, as traders increasingly bet that you're going to get a cut from the Fed in December. Brent, this is a very different story for oil prices, under pressure. It's been the worst week, in fact, for oil, set to be the worst week in about 2 years. $63 a barrel on Brent, up 0.5 in the session today as we look ahead to OPEC Plus and the meeting over the weekend. Let's get to what's happening then in terms of this technical glitch and the impact it's having across asset classes globally. The Chicago Mercantile Exchange halting live trading of futures and options, including crude and palm oil contracts, citing technical issues. The latest details from Bloomberg's Clara Ferreira Marquez. Clara, how unprecedented is this?
We have had glitches before, of course, and it does happen every so often, but it's a pretty... It's been a couple of hours now, and it's a day of very thin trade, so you're seeing a lot of this volatility building up, and very curious to see how this works on the open. So at the moment, we've got not only a range of commodities out, anything that trades on the Globex platform, but also the S&P 500, Dow Jones, Dow Jones futures, the Nasdaq 100. So a really wide range of things that are out today that we just cannot see. There's been a couple of hours now. The CME group is working to fix the outage at the data center. We don't have a lot more detail than that, but waiting for that pre-open notice to come through.
Yeah, it's a reminder, isn't it, of how closely linked so much of these systems are, and how reliant they are on data centres. And this is apparently down to a cooling system fault at one of the data centres on which the CME relies. Clara, in terms of the different asset classes across the market that have been affected so far, just get us up to speed on what's been impacted. You touched on a few of them there.
Well, there's quite a wide range. You're looking at equities, you're looking at FX because of the EBS platform being down. You're looking at a range of commodities, WTI, palm oil, because it uses the Bursa Malaysia uses that system. So a very, very wide range affected in the Asian morning today.
Clara, thank you very much indeed. With that important update, Bloomberg's Clara Ferreira Marquez, of course, on the outage and the technical issues at the CME. This is a story we're going to keep across for you. Of course, any changes, any updates, we'll bring you to immediately. Now, for a wider look at the markets, let's bring in Markets Live Executive Editor Mark Cudmore. Mark, we're ending the week then globally in a kind of positive setting. We put the CME to one side. Global stocks set for what, the best week since about June. How much of that is down to expectations that the Fed will cut in December? And what are the risks that momentum gets derailed, do you think?
I think a large part of it is down to the Fed pricing. So since the Williams speech a week ago, we've now priced back in almost a certainty of that Fed cut. We enter the Fed blackout period tonight. It would take a real shock in the intervening data to kind of stop that cut being delivered now. So that easing of yields right across the curve, not just the front end. We've seen 10-year yields come a lot lower as well, and that has eased some of the pressure on the dollar, and it's kind of boosted asset prices around the world. So that has fueled this. I'm still in the camp that the risk aversion that started at the end of October, 4 weeks ago now, is not fully exhausted yet. But I also want to reiterate that, the AI capex bubble will continue to reinflate enthusiastically into 2026. We will see much higher stock prices in the year end. Is this the time you want to be enthusiastically buying? I'm not so convinced. I think this side of Christmas, we've still got some more volatility ahead of us. And I think there's a lot of pressure to come, particularly from the crypto sector, where the digital asset treasury companies are still in a downward spiral.
That's interesting. You're striking that cautionary tone, Mark. So I'll fold maybe two questions into one. What could trigger a potential further move lower then before the end of the year? And as we look into 2026, are investors underestimating the fiscal impulse that's coming through, not just from the US and the spending bill and the tax cuts, but also possibly Japan and Europe as well?
I think I'll answer your second question first. I think the framework is very bullish overall into year end. There's a lot of liquidity in the system, as you're pointing out, coming from everywhere, from all different kind of sources. So I think the backdrop's still good. Global growth's holding up okay. The world's most important central bank is being pressured to have easier monetary policy than orthodox economics would suggest. So everything is still positive. And yes, we've got an AI capex bubble that will end horrendously, but it's not going to end anytime soon. It's not close to bursting yet. That's still probably a couple of quarters away. So that bubble will continue to inflate and prop up asset prices everywhere. So I think the backdrop's very bullish. What might derail us a little bit in the short term? And I say the backdrop's quite bullish. Well, I think two things. I think one is, now that we've priced in that easing for December, I think it's going to, the next move for yields is probably higher from here. Admittedly, I have got treasuries wrong the last couple of months. That's an important disclaimer there. But I think that we've kind of priced in that dovishness. And if anything, I think that, that we might get a hawkish cut in December, and I'm not convinced they follow through in January yet. So therefore, I think that there's probably some yields upside which might slow things or complicate things. But I'm continued to be concerned that the crypto sector is where there's a lot of pain to come out in the next couple of months. And while the direct overlap of investors is not massive, there is enough of the retail sector there that get hurt in the big popular retail names that weigh in that big mega cap 7 space, and that kind of drags in everything a little bit. And that's why I'm not particularly bearish. I just think the next couple of weeks still has a lot of volatility into us, rather than being the time to get enthusiastically behind the bull market that still has legs.
OK, so watch cautionary note went around the crypto space and the potential linkages to Mag 7, and we've seen that dynamic at play in recent weeks. So keep an eye on crypto, and maybe a hawkish cut from the Fed in December. Markets Live's executive editor Mark Cudmore. Mark, thank you. A fantastic setup in terms of what to think about across these markets as we come to the end of the week. So geopolitics right now. Hungarian Prime Minister Viktor Orban is to meet President Vladimir Putin as Russia weighs the sale of sanctioned refineries. Orban said Russia's war on Ukraine would also be discussed. For more, let's bring in Greg Sullivan, Bloomberg's Russia economic and government editor. Greg, what more do we know about Orban's visit to meet Putin? When's he going? What's expected to be discussed?
Yes, that's right. Hungarian Prime Minister Viktor Orban said that he would head to Moscow today and that oil and natural gas supplies would be on the agenda. Hungary continues to source a lot of its energy from Russia, and Budapest just recently secured an exemption to U.S. sanctions so they could continue to supply Hungary with some of the Russian energy. That's very noteworthy, of course. Now, Orban has been very open, along with other Hungarian officials, about their interest in these Russian oil facilities in Eastern Europe that have been hampered by U.S. sanctions. Notably, there are facilities in Serbia, Romania, Bulgaria. Just yesterday, we heard from the Hungarian officials that there are already talks with the Serbians over potential acquisition of that facility, which is hampered due to sanctions. Orban is considered the most Kremlin-friendly European Union leader. His last visit to Moscow provoked enraged responses from European leaders. He's also very close to Trump, which is noteworthy given Trump's push around his proposals to try to end the war. So it's a very notable timing for this visit to Putin in Moscow today.
Indeed, Greg. And this comes a day after we heard from President Putin for the first time commenting on this Trump administration built peace plan. It's the first time we heard from the Russian leader talking about that. What did he have to say? And was there any signal at all from the Russian leader that he could be ready to compromise?
Well, he largely stood his ground in a lot of ways, but it was noteworthy that he did say that the proposals that President Trump has put forward, including noting that they were revised in talks between the Ukrainians and the U.S. in Geneva, that those proposals could be the groundwork for a future agreement. In other ways, he definitely stood his ground, saying that sticking to a demand for Ukraine to cede territory, casting doubt on his ability to strike an agreement with President Zelensky of Ukraine. But he did say that talks are ongoing and confirmed that a U.S. delegation is expected in Moscow next week. And so it does appear that he is keeping the door open to talks. Now, how serious those negotiations are and how likely it is that the Ukrainians and Russians can bridge some of their key differences, there's a lot of doubt around that, especially in European capitals. But all eyes will be on those talks next week as Witkoff and other potential U.S. officials head to Moscow.
Greg Sullivan, Bloomberg's Russia economic and government editor. Thank you. Be watching that visit, of course, and looking ahead to the U.S. delegation next week, as Greg was saying. Greg, thank you. Meanwhile, President Trump says he will, quote, permanently pause migration from so-called third world countries. In a lengthy post on Truth Social, he said anyone who is not a net asset to the United States would be removed. It follows the death of National Guard member Sarah Beckstrom, who was shot near the White House by a suspected Afghan national. A second guard who was also shot remains in a critical condition. For more, let's bring in Bloomberg's economics and government editor Ramzi Al-Rikabi. Ramzi, what are we hearing from the president in terms of this potential visa ban, potential block on people, so-called third world countries? What do we know about the details?
Yeah, you're right, Tom. In usual Trump social media posts, it's kind of unclear what he's trying to say, though it's very lengthy, it's very forceful. The headline that we ran in the big focus is this idea of permanently pausing immigration from third world countries. What's very interesting about it as well is that if you read into the post, he has some even more intense plans about denaturalization, reverse migration. Trying to remove people from the country, I believe he says the phrase, that are incompatible with Western civilization. So in a pair of very lengthy and angry Truth Social posts quite late on Thursday night, which is a Thanksgiving holiday in the U.S., Trump is basically announcing a further crackdown on immigration, which, as I'm sure you know, is a continuation of some of the very severe policies he's already pursued in his second term.
Indeed, and it seems to be a reaction, Ramzi, to the shooting in Washington earlier this week of two members of the National Guard. Is that the link? What do we know about what happened there and how that ties into this response from President Trump?
Yeah, you're right. He didn't mention it. At least I don't think he mentioned it specifically in the post. But it does come a few hours after he announced the death of one of the guardsmen, a young specialist from, I believe, Virginia. There were two shot. The suspect is an Afghan national. It's understood, or I've seen it reported, that he has been admitted under a program that was there to assist Afghans who had helped the U.S. during the occupation and were evacuated after the fall of Kabul to the Taliban in 2021. I believe there are about 190,000 Afghans that have been admitted under that program, and Trump has been very critical of it even before this, and took even harder aim at it after the shooting. He had demanded an investigation into everyone brought in, a suspension of issuing green cards. The direction of travel on immigration had already been there, but the very tragic shooting in D.C. this week seems to have hardened his line, and is probably the trigger for the announcement he made this evening.
OK, Bloomberg's Ramzi Al-Rikabi with that update. Ramzi, thank you. Here's what else to be thinking about today, then. We're going to get EU inflation readings later this morning as rates from the ECB stay at 2% on the main rate, of course, and they have made decent progress in getting inflation to that 2% target. We'll get an update on the inflation story out of Europe later this morning. Also today, US markets, of course, will be closing early as the Thanksgiving holiday continues. Half a day of trading stateside today as well. Have to get the CME back up and running because, of course, that technical glitch is affecting the future story right now stateside. And later today is Black Friday, so a shopping frenzy expected. One guest telling me yesterday that potentially up to $1 trillion of commerce expected in the US alone on Black Friday. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to Day-B-Go, and the CME halt is, of course, the main story for us today. Details and analysis then on the Daybreak page. Coming up, Hong Kong's deadliest fire in decades has intensified scrutiny of the city's safety inspection system and whether warning signals were missed. We're going to have the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Hong Kong firefighters say they are close to completing their search of 7 burnt-out apartment towers after devastating fires now known to have killed at least 94 people. Dozens of survivors remain in hospital. Hundreds more have been left homeless as a criminal investigation continues into the cause of the disaster. Our China correspondent, Min Lo, joins us from Hong Kong, not too far away from the site, of course, of this blaze. What is the latest on the search, Min?
Yes, we are waiting for the press conference that has been delayed multiple times. It's going to happen right behind me in front of the fire truck. I believe you can see the podiums being set up. It's now confirmed at 3 p.m., so about 45 minutes from now. We know the Secretary of Security, Chris Tang, will be there along with the heads of the police, the head of the fire services as well. And many questions remain unanswered, right? Especially with regards to the cause of the fire and why is it that despite the Department of Labor visiting the site of the renovation 16 times and discovering all the substandard materials, sending multiple warning letters to the contractor, and yet this disaster was still allowed to happen. The government has already arrested 3 people from the engineering company, but the questions of whether or not the Department of Labor or the authorities need to also take some level of responsibility for this. There is a task force set up to investigate corruption. There seems to be suspicion of some irregularities when it comes to the contracting or oversight and other questions as well, despite aside from the building materials. And by the way, the Department of Labor said they consistently monitored the netting that is wrapped around the buildings and have found them to have met the fire safety standards. But the other issue that residents are complaining about is that the fire alarms did not go off. They didn't hear any alarm. Some of them did not know that their buildings were on fire until a security guard knocked on their doors, calling them to evacuate and leaving them with very little time to leave. And bear in mind, there are many of these residents who are elderly, wheelchair bound, and that just left them with very little time to leave.
And Min, there have been warnings. There had been warnings up until just a few weeks ago around safety concerns related to the refurbishment of these buildings.
Exactly. So that is the big question here. Why wasn't anything done? And there were repeated visits to that site. So certainly residents are demanding answers aside from the financial help that the government is giving out to the residents, which, by the way, really pales in comparison to what private sector donations are giving, because the government has said they will give out 10,000 Hong Kong dollars per family, which is about $1,300 US. Mind you, that is very little money for Hong Kong, considering how high the cost of living is. It's probably enough for a month's rent, but really pales in comparison to the enormity of the loss. The government said they have set up a 300 million Hong Kong dollar special fund to support the victims. But you look at the Jockey Club alone, they are donating up to 170 million Hong Kong dollars. There are all these Chinese tech giants, Xiaomi, Xpeng, Tencent, Alibaba really pouring in tens of millions of donation as well in Hong Kong dollar terms. And some are saying that the government effort is just woefully little given the situation and the tragedy that we're seeing.
Min, thank you very much indeed. An important update reporting for us on the ground, who's been across this story for us through the extent of that tragedy. Of course, Bloomberg's China correspondent Min Lo with that update. Coming up, live trading commodities, futures and options on the Chicago Mercantile Exchange. The CME is halted. We continue to bring you the latest throughout the morning. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, long before the current trade tensions with the US, China began investing in a global network of commercial ports. Bloomberg Originals has been looking at how this is shifting global trade dynamics and even sparking security concerns. Here's a preview.
Every year, China imports about 66,000 metric tons of these. That's the weight of about 6.5 Parisian landmarks, or if you like, 440 blue whales. And most of these avocados come all the way from Peru. This journey used to take over a month. Now it's a straight shot, cutting it by 10 days. Why? One word: megaport. And it's paid for by China.
Well, Chinese President Xi Jinping begins a week-long South America tour, opening a China-funded mega port in Peru.
This is a huge investment, not only for Peru, but in Latin America, and it is expected to triple agricultural exports of Peru.
Over the last 20 years, China has built up a network of about 100 ports on every continent except Antarctica, clustered around key maritime choke points, which are crucial to global trade.
This gives China a strategic advantage as global trade tensions rise. But it's also sparking concerns.
Even though these ports, by and large, are commercial ports, some of them do actually have the capacity to host naval vessels.
Well, subscribers can watch that documentary right now on the terminal and on Bloomberg.com and on the Bloomberg Originals YouTube channel. In fact, you can watch that on the YouTube channel tomorrow, but you can find it now on the Bloomberg terminal. Now, some other stories making the news this Friday. China's top diplomat, meanwhile, has used a call with his French counterpart to say the two sides needed to support each other, underscoring Beijing's push to win diplomatic backing during the continuing spat with Japan. Wang Yi said Japanese Prime Minister Sanae Takaichi had made provocative remarks related to Taiwan this month. French President Emmanuel Macron is due to attend a state visit to China next week. Deutsche Börse is in exclusive talks to acquire European fund distribution platform Allfunds in a €5.3 billion cash and stock deal. The German exchange operator's offer represents a roughly 33% premium to Allfunds' closing price on Wednesday. Deutsche Börse says there's no certainty that any transaction will take place. And Delivery Hero is facing pressure from several large shareholders to conduct a strategic review, and amid increasing consolidation in the food delivery industry, investors including Aspects Management and Broadpeak Investment Advisors are pushing management to consider a sale of the company or parts of its business due to weak stock performance. Coming up, I'm going to be discussing the economic impact of the UK budget, what it could mean for the BOE's rate path. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. We are going to be focusing on what's happening, of course, when it comes to the CME outage, because, of course, that continues. You do not have a print on US futures right now, so we're going to get an update in terms of what is happening. We know it's a cooling issue at a data center, of course. impacting the Chicago Mercantile Exchange, hitting contracts for US crude, stock futures and treasuries. We'll bring you the latest and an update. President Trump, meanwhile, announcing a permanent pause to migration, quote, from third world countries after the death of a National Guard member believed to have been shot by an Afghan migrant. Plus, the Hungarian Prime Minister Viktor Orban confirms he's heading to Moscow for talks with Vladimir Putin. That happening today. The Russian president says he's open to ending the war in Ukraine, but a peace plan is yet to be agreed. Let's get to the markets then with all the caveats around the outage from the CME and the fact that we do not have a print on US futures or WTI amongst other asset classes. European futures pointing to very modest gains. We've had 4 straight days of upside and global stocks are actually set for their best week since June. Here in the UK, FTSE 100 futures pointing up by 14 points. We'll see if we get a 5th straight day of upside for European stocks later today. Let's flip the board and have a look across assets. Half a day of trading stateside, of course, given the Thanksgiving holiday. So thin volumes, thin liquidity. Euro-dollar at 115. Silver in focus, charging towards a record high. 54 right now per troy ounce on silver. Set for a 7th monthly gain. 7 straight months of gains. That's the longest winning streak for silver since 1980. And part of that, of course, is down to rate cut expectations from the Federal Reserve. Markets pricing in, money markets pricing in, almost 80% chance the Fed will cut in December. And that's been a catalyst for silver, alongside gold as well. Gold up 0.7% in the session as well. 4,185. Gold poised for its 4th monthly run of gains also. Brent, different picture there. Currently at $63 a barrel, up 0.3%. OPEC Plus in focus. Oil facing its worst monthly run in about 2 years. Let's get the latest in terms of the outage at the Chicago Mercantile Exchange. Of course, it has been impacting the trading of futures and options. As I mentioned, the CME says the halt was due to technical issues at its data centres. Let's get an update from Bloomberg's Clara Ferreira-Marquez. Clara, how unprecedented is it? Is it unprecedented? Has this happened before? What do we know that has caused this outage? And what has the impact been so far?
I think a couple of points to bear in mind as we look at some of the disarray this morning. A lot of brokers and traders coming in, struggling to make sense of what's missing in the market. For one, it speaks to the dominance of the CME platform. You can see the wide range of assets that are affected here, from US government bonds to commodities to equities. It has happened before. I think thinking back to 2019, we had a couple of hours of outage. This is already longer than that outage. We've also had outages in other exchanges. It does occasionally result, for example, in regulatory fines because of the disruption to trading. Yet to be seen, of course, what happens here. We are waiting at this point for the pre-open notification.
Clara, thank you for the update. Bloomberg's Clara Ferreira-Marquez. Any updates, of course, any news on that front, we will bring to you immediately. To the UK right now. The UK's Chancellor and the tax-raising budget initially helped to calm the markets. You did see a bit of selling, though, of gilts yesterday in the session, so pairing some of the gains that came through on Wednesday. Her party, of course, some of the concerns there, particularly amongst backbenchers. But a YouGov survey says 48% of Britons were left unhappy. Nina Skero, Chief Executive of the Centre for Economics and Business Research, joins me now. Nina, great to have you around the set this morning on what has been a big week, of course, for the UK. Things have settled to some extent. We've got the detail. It was a complicated budget. There was a lot to work through. Where does it leave us in terms of your kind of key takeaways, particularly through the lens of the future growth trajectory for this UK economy?
Well, I'm surprised that only 48% of people in the YouGov poll were left unhappy. And the reason that I'm surprised with that is that I think in terms of the growth trajectory, it leaves us on a very, very low growth path. I did watch with a lot of surprise as when the Chancellor announced that the OBR had upgraded its growth forecast for this year to 1.5%, that a lot of MPs in the chamber cheered so loudly, because I don't think growth of 1.5% is anything to cheer about. We've had higher growth in, I think, 25 of the last 35 years. It's not that good relative to other advanced economies. So we are on quite a modest growth path, and I think the Chancellor didn't really do anything to address that.
The OBR has been accused in the past of being overly optimistic in its forecasts. Is 1.5% growth for next year overly optimistic, or does that align with your analysis?
I think for next year, they're actually expecting a slightly lower growth rate. I think we are slightly lower, but not too far off. The OBR has actually now significantly downgraded its expectations.
Yes.
A lot of it to do with them finally coming to terms with the fact that productivity isn't going to dramatically and magically improve in one particular year in the near future. So actually, their forecasts are now much more aligned with private sector forecasts.
When the Chancellor spoke to Lizzie Burden, she said that the OBR hasn't been taking into account trade deals that have been struck with Europe, with the US, with India. Does that become a material impact? Is that a fair take from the Chancellor, that there will be a growth impulse from trade deals that haven't been factored into these forecasts?
I'm not sure that that's going to be the magic key that unlocks growth. It could have some limited upside for sure, but I'm not sure if that's the one thing that's sort of suppressing OBR's outlook.
Well, what about productivity and AI? Are we overlooking the impact that the AI could have on productivity here in the UK, particularly when it comes to financial services in the years ahead?
Well, I think that's a question sort of across a lot of advanced economies, not just the UK. Yeah. How optimistic should we, is AI going to save us all? I think if it's going to sort of boost performance anywhere, it's going to sort of start in the US, and then the UK tends to be a little bit behind sort of in adopting a lot of advancements that the US is at the forefront of. So I think we here in the UK can sort of look to what's happening in the US, see how it's going for them in terms of the impact of AI, and then project that here sort of a year or a couple of years down the line.
Yeah, well, without the economic impulse of massive spend on data centres, because we're simply not getting that to anywhere near the same degree as they are in the US. When it comes to the housing market, we had this, of course, so-called mansion tax on properties over 2 million. What is it, about a third of London homes or something? What does that do to the property market of the UK at a time when prices are under pressure?
That is just such a silly proposed tax. I have yet to come across an economist that thinks that the way of the structure of that tax, what has been proposed, is a good idea. It's just so obvious it's going to create these bulges. Nobody's going to want a valuation of 2 million. A lot of properties are going to indefinitely be sort of valued at 1.99. Yes. I think it's going to create a lot of work for the government. I can imagine a lot of people claiming that they want revaluations if they're right around the key figures. And actually, the projections for how much money this is meant to raise. So the projection, I think, is 0.4 billion in 2029, 2030. Mm-hmm. That's nothing. So I actually think somewhere in there actually is an implicit acknowledgement that this is going to not work very well. Apparently, there's going to be an exemption for people that are asset rich, cash poor, that maybe they can pay it only after they will either sort of move on or pass away. So it just seems like it's not going to raise a lot of money, be incredibly complicated. I'm a little bit skeptical if we're ever actually going to see this thing implemented.
OK, that's on the housing market. Was there enough deflationary measures in this budget to give a glide path for the BOE on lower rates through 2026 beyond December?
I do think the Chancellor is right and has acknowledged the inflationary dynamic, and maybe that is one of the sort of excuses for not having more pro-growth policies. I do think in December we're going to see a cut. I do think in the immediate future what the Chancellor has announced is going to, all else equal, be a little bit deflationary. But of course that's coming on the back of the very inflationary NICS rises, which we saw earlier and which are very much feeding into inflation now. So overall, I don't think the government has, in totality, this government, been that actively, had their eye on inflation. But now what they've done most recently, I do think has paved the way for a cut next month.
So a cut next month, but into 2026, where the rates end? Are we getting sub 3.5%? Do we get to 3% by the end of next year? Given what we have, the data we have right now, how far can the BOE go on rates?
I would expect another couple of cuts in 2026, and then I would expect a normalization of around 3%, sort of somewhere into 2027. 2028, which is also when we're expecting inflation to approach the target. So we're still a couple of years away from that. But I do think the government is very, very now concerned on inflation, especially post the NICS situation. So I do think the path, we've had a lot of shocks lately, but barring sort of anything else, I do think we are sort of on an okay path at long last.
And just before we let you go, the inflation target, 2% for the BOE, when do we hit that?
We're expecting it at the early 2028.
early 2028, not until early 2028 to hit that target. The ECB is already there, of course. Nina, thank you very much indeed. Nina Skero, Chief Executive of the Centre for Economics and Business Research, with some smart takes on the budget, what it means for the Bank of England as well, of course. So the fashion space right now, the retailer Zara may have been one of the pioneers of fast fashion, but with China's Shein and Temu undercutting that market, Zara is now looking to pivot into the high fashion segment. That's the subject of today's big take, which coincides with the retail bonanza that is Black Friday. Let's get more from Bloomberg's Rodrigo Orihuela in Madrid. Rodrigo, why is Zara making this shift then, and is it really going to work?
So why it's making the shift, it's quite interesting. There is a generational issue. When the daughter of the founder took over as non-executive chairman, the family still controls the majority of the company, so they're really invested in this. And she took over 3 years ago, and she came from a very different background from her father. And she really wanted to kind of be respected and be seen as an equal by a lot of the luxury producers. So she has personally started working and pushing this strategy. Now, there is also a business reason, which is that you can aim for higher margins, you can aim for a product which isn't as much of a commodity as maybe you can get from some of those brands you were mentioning, Temu, Shein, and others. And so that is kind of the thinking behind this. We can start looking at other places where there is a bit more margin, which also makes us a bit different, and it also gives you certain respectability in certain circles within the fashion world.
And what are the challenges, Rodrigo, to making this pivot actually work and building out a slightly different proposition?
Yes. So basically, Zara and Inditex as a whole, Zara and two of the other affiliates which report under Zara make about 2/3 of Inditex's total revenue. Now, Inditex is one of the few European companies that is a true global leader. They are huge, they're massive, but investors still see it as a growth stock. For several years, it posted double-digit revenue growth. Sales were that's what people came to expect. And suddenly now you're seeing, because of their scale, that becomes harder and harder. So that's, the main challenge there is how do we sell more, given we are so big? And trying to go up market makes that even harder, because they have to balance between, we have to keep our traditional client base happy, they still have to be able to buy our products, but at the same time we want to be selling something more expensive. So how do you balance both things? And that is probably the big challenge they have, how to balance wanting to be both things at once.
OK, Bloomberg's Rodrigo Orihuela with the Bloomberg Big Take, which is on Bloomberg.com and the terminal, of course, in terms of the transition that Zara is hoping to make into higher-end parts of that retail space. On Black Friday, of course, that is a story that could be worthy of your time. Coming up, we're going to be talking to angel investor Reina about startups that he's backing across AI, robotics and defence. Someone who's backed some of the biggest names in European tech, like ElevanLabs, and fairly early on as well. That conversation's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. My next guest is an angel investor who's backed the likes of Revolut, recently valued at $75 billion US, and ElevanLabs, one of the hottest European tech startups as well, focused on voice AI. He's just unveiled a solo $15 million GP fund to back startups across AI, robotics and defence. Carlos Reina joins me now. Carlos, great to have you on the show. Thanks for your time. So you've got two hats, which is this key role at ElevanLabs, which has seen this very, very impressive growth. And you're just talking to me about the global expansion, but you've also now set up your own fund, very early stage fund. Let's start there, and then we'll get to your role at ElevanLabs. What are you looking at with this fund? What are the opportunities? I'm thinking defence. I'm thinking there's a lot of money going into drone makers. Is there a bit of a bubble there? Robotics, can we compete with China? What are you looking at in terms of opportunities?
No, and thank you for having me here. It's an absolute pleasure. So what I found in the market fundamentally is that there is in Europe we still have very few operators that have actually transited towards being investors, and I think that was a big gap in there. But fundamentally, like the way you build companies over the past 3 years has fundamentally evolved, right? It's like it's not the same. Like it was not the same now that it was like 3-4 years ago, because AI has fundamentally changed the entire game. You can sign enterprise deals today from any startup like in 60 days. Right, and that's what we're doing at ElevanLabs. That's what we're doing, like OpenAI, Anthropic, some of the best like companies in the market.
But you sign those enterprise deals because you have the credibility, because you have the product, because you have the team.
Yes and no. So I think like it's a combination of like that, but at the same time like the demand is in there. So like the real use cases, the ROI is there. Once you prove it, like the execution towards that is actually like fairly straightforward. And of course, like there is a lot of momentum that you need to be building on top of it, right? But like if you're able to sign like enterprise deals in 60 days, if you need to execute very quickly, if you're going to have like hundreds of competitors that will pop up in a month of you launching the product, then fundamentally like there is a lot that has changed in the market. And what I found is like there is a big gap in the sense like if you are building a company today and you are only backed by investors that haven't actually gone through building that company in the age of today, then you have a misalignment in there, right? So the entire thesis of the fund fundamentally is like I'm helping like founders like execute, build global companies from day one, backing like technical founders that like have a global mindset, specifically targeting like pre-seed and seed stages that I can actually help them like execute at a global scale, whether they want to be launching in the US, or they want to be launching Europe or Japan or Mexico or anywhere else in the world, right?
So we talked about AI, robotics, and defence. What stands out? Where are some of the most exciting opportunities? And what do you say to, for example, the question around whether or not there's been too much money going into defence tech, for example?
I do think so. There's been like quite a lot of money going into defence, specifically in Europe right now. I don't think like we're materializing yet the deals from the government side, but I think it will happen. I think like we need another 12-18 months. It's like a very slow cycle in terms of sales and in terms of like building companies in the defence side. But I think like the three topics are not kind of random, right? So like fundamentally, like if we need to be building like the next generation of defense technologies, because in practice no one wants to actually serve in the army these days, or no one wants to actually work and defending a country in Europe. There's like a little bit of like a challenge in there. So you need to actually invest a lot more on robotics or like defense technology that will essentially make it like less heavy on the human side. But at the same time, there's a big component like who's going to be building and putting together those hardware. We need to actually invest in robotics, specifically on like in warehouse, like in areas that actually you're going to be able to actually put together those drones or manufacturing like in an automated way. But to be able to do that, also you need to actually like artificial intelligence that is going to be powering those robotics, right? So like all of the three areas are kind of intertwined.
They're kind of intertwined. Does China not win the robotics race?
Depends on which segment, right? But I don't think like any European government is going to be buying anything from China in terms of defense, like anytime soon.
Not defense, no, but robotics.
Oh, robotics. It depends, right? Like yes and no. Maybe they're focusing a lot more these days on the consumer side. Would you buy a robot that actually stays in your house and is doing the dishes and so on? So my biggest worry is like the robot is doing the dishes and I just like pass by and then the robot realizes I'm there, turns around and stops me, right? So there is all of these things that like it's I think it's still a challenge on bringing like a big robot in your home. But I do think like from an industrial perspective, that's where essentially the fund is actually focused on. They're super good on that and they're like way ahead of like anything in Europe or in the US. But I think we will end up catching up fairly quickly.
Okay, you've really just built on my fear of robots there, guys. Thank you for that. You have this key role in terms of the go-to-market role for ElevanLabs. It started off as a company focused on dubbing, translation. Now you've got all sorts of different audio products. The number of products that ElevanLabs is coming out with, just get us up to speed on what exactly you're offering to your different enterprise clients right now and what the annual recurring revenue is looking like, what the growth rate is looking at as you look into 2026. What is the focus of your attention when it comes to the growth story for ElevanLabs?
Yeah, so I think like we started as a company like building foundational models from a voice perspective. So like 3 years ago, we built like the best text-to-speech model where you input text, high quality speech comes out, you can voice clone with like guardrails and all of that stuff. Then we expanded towards like a range of like foundational models that is all related to speech, right? Whether that is transcription to understand what someone is saying and be able to actually codify that, or that is like turn taking, so that like I know like I put together a foundational model where like for AI agents to decide like if it needs to interrupt or not interrupt, and what like music and all of those pieces, right? Anything that is AI audio. But we also realized like we needed to go much deeper, right? Because like it is great to have the foundational models, but like if you want to go enterprise segment, mid-market, like there's a wider range of use cases in there for companies that might not have the technical know-how on how to deploy those foundational models. So we went deeper into like orchestration of products end to end, right? One of them, we started with like the dubbing product. How do you dub like media content in a matter of minutes? Fantastic, that works super well for us. And then last year we ended up launching the AI agents product, right? Where you can launch an AI agent that interacts with customers in a matter of minutes. And that can be like for automating customer support, that can be for automating like any sort of like customer interaction, education technology and so on. So we're betting big on the application layer and also the foundational models. So we've actually like been investing quite a lot on those segments. The growth has been spectacular, right? So we went like, Matty mentioned it earlier in December, like we crossed 200 million in revenues, looking to finish the year at 300 million in revenues. Next year, like we're still like looking into like what is the forecast that we're going to have. But like it's actually very healthy.
Carlos, we've run out of time, but really appreciate your insights and the growth that's coming through from ElevanLabs and the new investment opportunities as well. Carlos Reina, go-to-market lead at ElevanLabs and founding partner for GP fund Baobab Ventures. And a reminder of one of our top stories. President Trump says he will, quote, permanently pause migration from third world countries. In a lengthy post on Truth Social, he said anyone who is not a net asset to the United States would be removed. It follows the death of National Guard member Sarah Beckstrom, who was shot near the White House by a suspected Afghan national. A second guard who was also shot remains in critical condition. In our coverage of the story earlier, we accidentally said that Beckstrom was from Virginia. She was, in fact, from West Virginia. There's plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So on a day, of course, of thin volumes as a result of the Thanksgiving holiday, now we half a day of trading today, we do have as well this outage at the Chicago Mercantile Exchange impacting futures. So here is the impact then. We're going to keep you across this story, of course, and any updates. We know it's linked to a data center and maybe a cooling system there. So we know repairs, at least you would imagine, are trying to be put into place and underway. So we'll keep across this, but the impact is still being felt in terms of the US futures picture. We're not getting an accurate print on that, and also rates, FX, commodities as well, WTI in focus. So that is the impact from this CME, a story we'll keep across for you. Let's flip the board and have a look at something very different, which is expectations around the ECB. We know that rates, of course, are around that back to that 2% level on the main rate for the European Central Bank. Markets are not pricing in any additional cuts next year from the European Central Bank, but Bloomberg Economics sees a heightening chance of an ECB cut. They're starting to see evidence from the sound and what we've been hearing from some ECB officials that maybe that is something to start considering now. Expectations of a cut building, not being priced in next year by markets at least. European inflation drops later this morning. We'll break that for you, of course. That will tie into ECB expectations. The opening trade is up next. This is Bloomberg.